Major alert about silver prices right now. If you're holding gold or silver, you need to hear this immediately. Francis Hunt just shared something that's absolutely shocking. The relationship between gold and silver prices is about to collapse down to single-digit levels. And when that happens, silver isn't going to stop at $300 or $500. Hunt is projecting four-digit silver prices, maybe $500, possibly $2,000, in what he refers to as traditional money terms. But here's the part that should really worry you. Somewhere between 60 and 70% of the world's silver supply comes as a secondary product from mining other metals. And these new solid-state batteries might consume 100% of today's silver production, leaving zero for solar panels, zero for electronics, zero for you and me. The supply shortage has already started, and most people invested in silver have absolutely no clue what's about to happen next. Now, before we go deeper into Francis Hunt's alarming silver warning, I need to ask something from you. If you're over 50 and you've put in hard work your whole life to create your wealth, then this channel was built specifically for you. Please just take 2 seconds and hit that subscribe button down below, because the financial turbulence ahead isn't going to wait for anybody, and I want to make certain you're ready. Also, leave a comment down below. Let me know where you're watching from. Are you in Texas, California, Florida, or maybe somewhere around the globe? I personally read every single comment, and I want to know that you're part of this group. Now, let's discuss what Francis Hunt just uncovered about the silver market and why he thinks we're about to see the largest wealth shift in precious metals history. Francis Hunt looks at his charts, and what he observes makes his eyes go wide with worry. The gold-to-silver ratio, that crucial figure that shows us how many ounces of silver need to purchase 1 ounce of gold, is moving into what he describes as the contagion stage. And most people investing have zero clue what that actually means. For many decades, this ratio has been artificially controlled, pushed higher and higher, making silver appear undervalued when compared to gold. But Hunt thinks that distortion is about to fix itself violently. He references his technical charts. The ratio recently touched 126, an incredibly high figure. But then, something shifted. It dropped below the crucial mark of 65, and that drop wasn't just a small adjustment. It activated a huge macro reversal formation, a head and shoulder structure that Hunt has been monitoring for years. If this pattern is going to complete, he says in a calm voice, when prices climb up, most of the time they fall back down, and we're observing that right now. The technical structure by itself suggests the ratio might crash down to 32, but Hunt projects even lower. He thinks the ratio will ultimately drop into single-digit territory, something most market analysts would say is completely impossible. Just think about what that actually means. If gold is trading at $3,000 per ounce and the ratio falls to 9, that values silver at more than $333 per ounce. But Hunt doesn't stop his projection there. He recognizes something far larger on the horizon, far more dangerous, and far more profitable for people who are properly positioned. Hunt clarifies that markets, particularly in the final stages of a bull run, don't halt at sensible price targets. They overshoot in dramatic fashion. You might expect a move to $300, he observes, but wind up seeing $500 or possibly $2,000. His tone stays measured, but his statement has serious weight. Remember that markets have a tendency to overreact in the reverse direction. Suddenly, everyone starts thinking silver is ultimate money and overreacts massively. Now, this isn't just promotional talk. This is recognizing historical patterns. Hunt has examined prior silver bull markets thoroughly, and he understands how they finish. They don't finish peacefully. They finish in parabolic explosions, where prices shoot past all rational thinking, beyond any reasonable expectations, and generate once-in-a-lifetime wealth for those who maintain their positions long enough. But this is exactly where most people investing make their fatal error. They exit their positions too early. Hunt introduces what he refers to as the law of the parabola, a mathematical reality that most traders completely ignore. He presents an exponential chart that proves, during parabolic movements, the majority of your profit materializes in the final 5 to 10% of the entire move. That final 5%, Hunt clarifies, is going to deliver half of your total profit. Really, let that concept sink in. Half of all the money you're going to make arrives in the last few weeks, or possibly the last few days of the day. Movement. Too many investors are going to exit too soon, he cautions. And his warning is absolutely correct. Most people holding silver will observe the price reaching 100, 150, 200, and they're going to panic. They'll lock in their gains, believing they've succeeded, only to witness an absolute horror as silver skyrockets to $500, $800, $200 without their participation. Hunt is attempting to prepare investors for what's approaching. He's attempting to teach them that this price movement won't resemble anything they've experienced before. At that stage, he states in a quiet voice, "I'm not certain what the dollar even means anymore. I'm uncertain what form of currency will be in use at that time, whether it's still a dollar, a digital dollar, or something completely different." His statement hangs there heavily. This goes beyond simple silver price increases. This concerns the breakdown of our complete monetary framework. And silver, neglected, forgotten, suppressed silver, is positioned to transform into the most desired asset on the entire planet. Hunt thinks the technical breakdown of the gold-to-silver ratio is only just starting. The contagion phase is when momentum accelerates, when technical indicators line up, and when prices begin moving far faster than anyone anticipates. He's observed this formation previously, back in the 1970s and 2011. And now it's occurring again, but this time around, the movement might be larger than anything we've seen in history. The ratio dropping below 65 was the signal to start, and the race has already kicked off. Most people investing are still standing at the beginning line, questioning whether they should jump in. And while Hunt and people who follow his work are already far ahead, the question right now isn't whether silver is going to climb. The question is, exactly how high will it climb before this cycle finishes? And Hunt's projection is both terrifying and exciting at the same time. There's one question that bothers every silver investor every single day. Is it too late to purchase? Francis Hunt gets asked this question all the time, and his response might catch you off guard. He leans in, looks straight at his audience, and poses a straightforward question. If something is heading toward $200, does $82 appear like too much to spend? The room becomes silent because suddenly the mathematics becomes perfectly clear. Investors worry about purchasing silver at $80, $90, even $100. They believe they missed their opportunity. They believe the major gains are already in the past. But Hunt views it completely differently. Totally differently. He's not simply looking at today's price level. He's looking at tomorrow's reality. And in that reality, present prices are a genuine gift. A gift most investors will decline to accept because of fear, because of uncertainty, because they're waiting for a price drop that might never materialize. Hunt then tackles another worry, one that keeps traders lying awake at night. Where do you make your entry when the monthly chart displays no clear pullback? This is the entry point dilemma. On the longer time frames, silver appears like it's already in full rally mode. No obvious support zones, no clear entry points. Just a vertical rise that appears impossible to participate in. But Hunt has a method, a strategy he's developed over decades of trading precious metals. Using multiple time frames, he clarifies, is beneficial because it means you can continue getting entry opportunities within smaller time frames. He's not instructing people to purchase blindly at whatever price. He's showing them to zoom into shorter time frames to locate the micro pullbacks that occur within the macro rally. Hunt opens up a live trading platform, the exact same one he utilizes for his personal money. Not theoretical examples, not hypothetical situations. Actual trades with actual capital. He points to Bitcoin, gold, silver, all moving higher. And everyone kept saying they had peaked. What did we actually get? Hunt asks. We were provided a chance to re-enter during this daily time frame. He displays 2 entry locations, spots where silver temporarily dipped within the overall upward trend. I opened 2 entries, he states. I place stops right here and here on what we describe as the relative low, with stop-loss orders. This is the HVF approach, Hunt's personal system for trading macro bull markets on shorter time frames, and it's performing exceptionally well. Those stop-loss orders, he continues, are now positioned up here with guaranteed profit locks. We placed additional orders, and those are now significantly in profit. Approximately 150% gain there, roughly 305% there, and we're still climbing. Higher. This isn't random luck. This is deliberate strategy. Hunt is demonstrating in real time, with actual money, that even during a powerful bull market, there are still entry chances if you understand where to look. The critical point is grasping that volatility generates opportunities, not roadblocks. Every single time silver pulls back, even by just $5 or $10 on the daily chart, it's an invitation to participate in the move. But most traders completely miss these chances because they're focused on the monthly chart, observing silver climb from $30 to $80 and thinking, I'm too late. While professional traders like Hunt are zooming into the hourly charts, the 4-hour charts, the daily charts, and locating perfect entry zones with controlled stop losses and enormous profit potential. Hunt then presents something that makes the audience react with surprise. A quarterly chart of silver extending all the way back to the 1950s, 75 years worth of data, and on. That chart. He points out what he describes as a squeeze within a squeeze. A compression formation so tight, so powerful, that when it releases, the explosion becomes unavoidable. We had technical evidence, Hunt clarifies, that silver was preparing to make a substantial move. We would break through the exit and position the stop loss there. But then something even more favorable occurred. You frequently receive a gift within a gift, he states. The markets genuinely love you. I demonstrate to people how to make the markets love them. His philosophy is distinctive. He doesn't view markets as adversaries or combat zones. He views them as sources of opportunity, continuously offering rewards to those who maintain attention. When we're operating in the markets, Hunt states in a poetic way, we feel like blind creatures walking across pearls, gold, and diamonds. The markets desire to love you and provide you gifts. All you need to do is bend down, open your eyes, and collect them. That squeeze within a squeeze activated at $25 with an extremely tight stop loss and a price target of $333. But Hunt makes it absolutely clear that $333 isn't going to be the peak. It will be a location to pause for some time, a consolidation area before the next movement upward. He's already holding 50% of his position, prepared to secure partial profits while allowing the remainder to run to wherever this market chooses to carry him. This is the distinction between amateur traders and professionals like Hunt. Amateurs question, is it too late? Professionals question, where's my next entry point? Amateurs observe a rally and feel they've been left behind. Professionals observe a rally and discover 5 separate methods to participate in it. Hunt's statement is absolutely clear. The movement has begun, but it's nowhere near finished. And for those prepared to understand the strategy, the opportunity remains completely open. Francis Hunt is preparing to disclose something that transforms everything. A supply shortage so serious, so perfectly concealed, that even most silver market analysts have totally missed it. He opens up a chart that displays the gold-to-silver ratio extending back many decades. And what he's preparing to clarify will genuinely shock you. The gold-to-silver ratio, Hunt starts, has remained far too elevated for far too extended a period. But why exactly? Why has silver remained so suppressed relative to gold for so many years? Hunt zooms the view out further back to 2007, then even further still all the way to the 1960s, the Vietnam War period, and he observes a formation, a disturbing formation. Everything has transformed into being more financialized, he states, and silver prices have been forced downward relative to gold prices. But it extends deeper than that. Throughout all of history, the gold-to-silver ratio has maintained natural ranges. In ancient Egypt, it stood at 8:1. During different historical periods, it ranged from 10-1, 12-1, 15-1. But never throughout human history has it remained above 100 for as extended a duration as it has in recent times during this era of financialization. Hunt clarifies there were several that reached 30-1. That was still part of the suppression of silver prices. The suppression occurred because there existed too much physical inventory above ground. Physical silver stored in vaults could be utilized to control prices to maintain them artificially depressed. But Hunt reveals the critical information. Everything indicates that if you don't store it in a secure location within the boundaries of your own nation, you don't actually possess it. In different words, most of that above-ground inventory doesn't genuinely exist. Not in the manner people assume, not in readily available form. The inventory advantage is vanishing, and, when it's completely gone, the actual supply shortage will become exposed for everyone to observe. But here's where the situation becomes truly frightening. Hunt discloses the production challenge that nobody's discussing. Between 60 and 70% of silver, he states slowly, originates from mining different things. Really, let that sink in deeply. Most of the world's silver supply isn't extracted by silver mining companies. It's a secondary product, a leftover from zinc mining operations, copper mining operations, lead mining operations, gold mining operations. That genuinely means, Hunt continues, you don't have many mining operations that work specifically to extract silver. Only approximately 30 to 40% of your total supply originates from someone whose actual job is to extract silver from the ground. This is absolutely catastrophic because it means when silver prices climb higher, supply doesn't respond accordingly. If you're operating a copper mine and you're excavating for copper, you don't suddenly excavate faster simply because silver reached $100. You're there for the copper. The silver is merely a bonus. They don't prioritize it as much. Hunt clarifies they're going underground to extract the iron ore, zinc, gold, copper, or some other metal. The silver will be extracted, but it's not the reason they're excavating. This generates an impossible scenario. Demand for silver is preparing to explode dramatically, but supply cannot respond accordingly, regardless of how elevated prices climb. And here's the reason. Demand is preparing to go parabolic. Hunt discusses the emerging world. We're being pushed toward electric vehicles, solar panel installations, smart grid systems, electronic monitoring systems. Everything necessitates silver now that we're transitioning toward what Hunt calls the iPad car, the iPad everything, and the complete world of rechargeable battery technology. Everything becomes a rechargeable battery. He's referencing the emerging solid-state battery technology, the ones that can power a vehicle for 900 kilometers and recharge to 80% in merely 8 minutes. These batteries represent a complete game-changer for electric vehicle technology. But they possess one significant problem. They necessitate enormous quantities of silver. Hunt presents the decisive blow. That would require approximately 20% of those significantly superior batteries, which translates to requiring 100% of the silver that is presently being produced. Go back and read that statement again. 100% of present silver production exclusively for battery manufacturing. That translates to zero silver for consumer gadgets. Hunt states, zero silver for anything else whatsoever. Zero silver for solar panel production. The solar energy industry by itself consumes enormous quantities of silver. Every single solar panel contains silver paste for electrical conductivity purposes. And the world is deploying solar panels at unprecedented pace. Then there exists electronics, smartphones, computers, medical equipment, military hardware. Everything necessitates silver. And don't overlook defense applications. These generate significant heat. Hunt observes they're extremely effective at producing weapons. Everything requires additional silver. Now the supply-demand equation has become completely shattered. We're moving into a world where silver demand might be 5 times, 10 times, potentially 20 times present production levels. And there exists no method to boost supply rapidly. You can't simply launch a silver mining operation overnight. It requires years of development, billions of dollars in investment.